Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined this week by Nicole Dines and Dan Innes. Nicole, let's start with you. What stories have you been watching this week?
Well, Real Asset Media held the launch of the UK Senior Living Report, which was done by Bonnard and Mosaic Asset Management. And it painted an interesting picture. For a start, Bonnard had done two previous reports on France and Germany, which are obviously the biggest markets in continental Europe. And they focus on the top 20 cities, while in the UK, they focus on the top 20 regions instead, where about 70% of the supply is. And it's a very different market. While in continental Europe, the rental model prevails, in the UK, it's very much the for sale model prevails. And people tend to retire to these retirement communities earlier in the UK at an average age of 78. So they've still got a big stretch of life ahead of them. So they want bigger apartment sizes in their retirement villages. So it paints a very different picture of what people want. But as Frederick Dibb of Mosaic Asset Management said, the market is so big that there's such growth potential that it allows for both models to grow and prosper. You don't have to choose one or the other. In fact, he said that France and Germany will probably benefit from having more for sale properties in the senior housing market, and the UK could do with more rental properties. But in the UK, the provision rate is incredibly low. It's 2.2%, and in Greater London, which is obviously the place where most people are concentrated and which is set to see the biggest population growth in the next 5 years as well, the private provision rate of senior housing is only 0.2%, which is so clearly the demographic fundamental work very much in favor of this sector underpinning demand across the board. But of the most in-demand sector in the UK is what is called housing with care, which the report suggests should be called integrated retirement communities, to give it a sort of term that everyone can understand, because descriptions different in various markets, it can be quite confusing. Care homes in the UK have 50% of the market, about 450,000 units, and housing with support about 410,000. And by comparison, housing with care only has 80,000 units, which is less than half of what France has on offer and less than a fifth of what Germany has. So clearly a lot of demand there, a lot of growth potential. And they suggested also that integrated retirement communities are very much impact investing. It's very much about keeping people at home as long as possible in a good surrounding and giving them the best possible quality of life. Real Asset Media also held a briefing on the first Outlook 2022 briefing. This one was on France, the French market. Again, France, very interesting market because it had a very bad pandemic and some of the toughest restrictions in Europe. It had the deepest recession in continental Europe, but it's bounced back very strongly. GDP growth is doing very well. Unemployment has fallen. And Daniel White of Primonial said that it's got the lowest bankruptcy rate, company insolvency rate in 2021 that ever recorded. So things are looking up. It's bounced back very strongly. As we know, France has a very strong domestic investor base, which has continued to be active throughout the pandemic. But while Asian capital has disappeared, it was very present before the pandemic. We remember especially South Korean capital in Paris. Well, that capital has disappeared, but US capital and European capital has continued to be deployed in all asset classes in France and especially in Paris. So that's continued to do well because the market, all the experts on the panel agreed is obviously very deep, very liquid, and it doesn't depend, the French market doesn't depend on any one sector. So it's seen as very resilient. And residential obviously has come up strongly during the pandemic, but there are also huge opportunities in refurbishing offices because there are a lot of buildings that are not ESG compliant and now do not meet the requirements. And especially the big insurance company and the other big institutional investors that hold so many of these dozens and dozens of these office blocks, which are to avoid them becoming stranded assets, they will be putting them on the market. So there are huge refurbishing opportunities. The market has become a lot more competitive, everyone agreed. And Tanya Bontemps, president of Union Investment, said that even there, very strong institutional investors, traditionally conservative, have changed during the pandemic, have changed their business strategy and are now prepared to take on a lot more both operational and development risk. The market is competitive, life is a bit harder, but that's a good sign because the market is very active.
I noticed as well, Edward Bates from Stam Europe, obviously now as part of the Core Estate Capital Group, looking to extend the Youniq microliving concept into France potentially, and some of those residential initiatives. And I noted again that there was more in the news around the alternative sectors, with Nuveen buying a second Swedish self-storage outfit. You'd also got more kind of focus on mixed use assets, so Mark transforming a derelict Milan centre into mixed use, so picking up on that theme, and Garber as well, of course, on the logistics space, funding assets near Amsterdam Airport. And again, on the infrastructure side, we saw KGAL's renewable energy fund hitting a first close at 50% of the target. Dan, what have you been following?
Well, last week we were looking at some real major investment news where ARA Dunedin, they completed its acquisition of the European real estate investment management business, Infrared Capital, that many people will be familiar with. And that creates a £3 billion European portfolio. And that sort of transferred business will operate as ARA Europe's discretionary real estate equity fund management platform. And as it's going to be called ARA Europe Private Markets. So that kind of transaction has kind of really kind of, expanded ARA Europe's existing UK-based retail platform into a broader-based asset manager with over £12 billion worth in transaction value right across the UK and Europe. And then in significant news coming over from Europe was that Blackstone, they've agreed a new deal to acquire the substantial part of Facebook's new European headquarter building in Bridge in Dublin. And they're acquiring that from the Serpentine Consortium. Blackstone's offer, which is about 400 million euros, that kind of saw off, a bit of a bidding war, between a range of parties that allegedly included Tishman Speyer and Decker Immobilien. That deal sees Blackstone secure ownership of 4 buildings, which comprise 340,000 square feet of office space in that wider 900,000 square foot Facebook campus, which is in the process of being delivered on that AIB Bank Centre site. That's pretty much poised to become Facebook's second largest campus globally, and outside only by that incredible headquarter building in Menlo Park in California. Staff there for its subsidiary applications like WhatsApp, Instagram, and Messenger, as well as its Oculus virtual reality unit. Talking about which, I know we mentioned Mapic briefly last week, but talking about virtual reality units in Bridge, there was also the MIPIM PropTech Propel sessions in New York last week. And it's been really fascinating to see some of that content trickle through on social platforms. And then last week, Sky News, they revealed that there is an alleged sale of the Boots pharmacy portfolio by the Walgreen Boots Alliance, and that they've lined up Goldman Sachs to advise them into a potential sale or a float of that pharmacy juggernaut. And you remember, Walgreen Boots Alliance, they were formed in 2014 after Walgreens bought their last 55% in that UK and Swiss-based Alliance Boots that it didn't already own. So that could hit the market early next year with an estimated price tag of £10 billion sterling. And of course, as I say, that it could also be a potential stock market listing. But Boots' MD, Sebastian James, said sales through its online business recently had doubled against pre-pandemic levels. And that, so, people are really bouncing back and taking healthcare very, very seriously, quite naturally. And the firm maintains its growth. Despite returning, despite following the jittery high street footfall figures that we're all watching right across Europe.
Yeah, interesting to see the footfall figures. Also saw some interesting figures from Kone on elevator data, just in terms of the details of how that's changing city usage, both in and out of COVID. So really interesting to see that in terms of shopping centres, hotels, and also office. I noticed as well, picking up on that theme of retail, there'd been a lot of focus on outlets versus shopping centres, and that M&G were buying a Nordic park from CBRE Investment Management. So interesting to see some deals coming through on that. Also the Nordics, Nusec, planning to expand its European presence. So interesting to see that as well. Thanks very much, Dan. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.